G'day and welcome to this week's client question. Now this question was only asked probably about 10-15 minutes ago, and it's a prospective client who we're about to onboard to help run their self-managed superannuation fund. And this client's going to go from probably more of a trading point of view into investing, where the businesses we purchase will be held long term. Now, a very common question I get is, what sort of performance have you had in the past? And I was luckily able to answer that in a very positive way, to say that we've had some very good results for our clients, even in balanced funds where it's not all 100% businesses in the share market, but there's conservative assets such as term deposits and cash. And some of those returns have been in excess of 20% for the last 12 months. But the one thing I had to mention to him, that that is what's happened in the past. We now need to draw a line in the sand from here on in. And I said I can absolutely make zero guarantees that I can do the same performance moving forward. And in fact, I'm often talking to my clients and saying, well, what's happened in the past is now ancient history. It's the decisions we make from here regarding the assets you own that will determine what return we get. So I'm really tempering clients' expectations in regards to their future expected returns, knowing that the share markets on average return 10 to 11% over the very long term. So while it's very nice to talk about past returns, they mean absolutely zero. And obviously we start from scratch at the start of each year, and particularly for every new client that we deal with. So good question, common question, but not one that we can guarantee returns on, because that's the share market and it's extremely volatile all of the time. But over the longer term, it'll provide us the best result. Thanks for listening, and we'll catch you next week.